Welcome to HAVAN's Home Buying 101 video series sponsored by BC Housing and Associate BC. My name is Shayne Ramsay. I'm the CEO at BC Housing. It's important to empower yourself with knowledge on what to look for in contracts and associated risks when entering into a mortgage. Today, I am chatting with John Wiebe, an associate at Kuhn LLP. Welcome, John. So let's start by asking, what are some of the legal considerations a home buyer should know about?
Thank you, Shayne. Like you mentioned, I'm an associate with Kuhn LLP Legal Counsel, and we have a long-standing relationship with HAVAN, so I'm excited to be here and join this webinar series on home buyers. So legal considerations when entering a contract. I'd like to start out with just a disclaimer. I don't think it would be a legal presentation without one. I just want to say that whatever your fact scenario is, everything that I say today might not apply, and so don't take this as legal advice for your particular scenario. Go talk to your lawyer if you have questions or need advice, and don't rely on what you're hearing today. But that said, I'm happy to discuss some of the implications and considerations when entering a contract and other things that we'll get to. So first, when you're looking at your legal contract, you want to keep in mind that your lawyer or notary will get your contract likely once subjects have been removed. So at that point, the contract is firm and binding, and you can't go back and change it. So if you're hoping to maybe tweak your contract with your lawyer, make sure that have your lawyer review the contract before you make the offer. Talk to your realtor, and sometimes offers need to go in same day, and so you can't have the lawyer look at it beforehand. But if that's the case and you want your lawyer to look at it, or if the realtor maybe has some questions or doesn't really understand what might be on title, have it as a subject in your contract that your lawyer can review and give you advice. And you would remove that subject maybe within 5-10 business days. And so that gives you time to sit down with your lawyer, have things explained to you if you need that advice, and that'll protect you further in that way. A few things in particular to look at regarding the contract. You want to think about, if you're purchasing with a spouse or somebody else, whether you're both going to go on title or whether only one of you will. And so when you enter the contract, this is important because you're going to be listed as parties to that contract. So if you're going to set up a scenario where maybe only one spouse goes on title, that spouse would be the only party in the contract. But you might want to include a provision that would allow you to add the spouse if after receiving counsel, you decide to put both on title. Typically, spouses will both go on as joint tenants, and that would mean the right of survivorship applies. So if one of you passes away, their interest would pass to the other. You hold title 100% together. There are a few other scenarios, and you might want to leave a spouse off if one of you has work that is high risk or high liability, or maybe you're trying to save the home buyer's exemption in relation to property transfer tax, the first-time home buyer's exemption. So those are a few things to consider. You also want to keep in mind closing costs. And so I've heard it said that you should budget about 1% of your purchase price as closing costs. In my experience, that's quite high. But if you're going through the mortgage broker or the lending process, a lender might even require you to have 1% available. And so you're going to be saving for property transfer tax. You're going to have any charges related to the mortgage. The lender is probably going to require title insurance or a property survey to ensure that they are protected as a lender. You're going to have your legal fees, your notary fees. You're going to have your land title registration charges. So maybe look around, ask for some quotes, see what's included with a lawyer or notary's fees, and just be ready for the closing costs in addition to your purchase price. You're also going to have property tax adjustments. So depending on whether the seller has already paid property taxes, you're going to have your purchase price adjusted up or down. The final thing I'd like to maybe just point out is property transfer tax. So there are some exemptions, but the default is that it will always apply. And so it's 1% on the first $200,000 of your purchase price, 2% up to $2 million, 3% up to $3 million, and 5% beyond that. So if you're a first-time home buyer, that exemption only applies if the property is under $500,000 and if it's within a certain square footage. Now, in the Lower Mainland, unless you're further out east, you're probably not finding a lot of properties at that value. And so keep that in mind. If you're buying a new home, property transfer tax can also be exempt if it's under $750,000 currently. And so property transfer tax can be a significant cost, and so just make sure that you're aware of what it might be.
John, with respect to contracts, what is required and what should a buyer know before signing?
Yeah, so in a typical residential purchase, you're going to have the standard real estate board, which is likely what your realtor is going to use. If you're using a lawyer to draft the contract, let's say it's maybe a private sale or a sale between family members, a lawyer can do that for you without a realtor. It's going to cost you a little bit extra with the legal fees, but you're going to be saving on the commission. But if a realtor is drafting your contract, which is typical, you're going to have names of parties, you're going to have the purchase price, the legal description of the property, all standard stuff. You're also going to have the closing completion date and adjustment date, and the possession date as well. And so the difference is there. The completion date is when money changes hands, legal title is transferred into your name, and the mortgage would be registered at that point. This should also be when your fire insurance and personal property insurance should kick in. The possession date is usually a few days later, and so that gives time for, let's say maybe the seller is completing on a different purchase, or just gives everyone enough time to make the transfer for the sale proceeds to come in, if you're selling, for the mortgage proceeds to come in and be flipped over to the seller. And so the possession date's usually 1 or 2 business days after, so keep that in mind. The adjustment date would be the possession date as well. And so the adjustment date would be when the property transfer taxes and strata fees, if any, would be adjusted. And so if you're purchasing in, let's say, December, you're probably paying only a month worth of property taxes. And so your purchase price is going to be adjusted up for that amount. If you're buying in January, you're probably paying for the whole year, but keep in mind that property taxes aren't paid until July, and so you're going to be receiving a credit. So just keep those in mind when you're looking at the adjustment date, and that will affect your closing costs. Some other things that will be in the contract, you're going to have the subjects. And so you're going to have subject to home inspection. You're going to have subject to financing, obtaining financing if you need to. Believe it or not, some people complete in cash. And so if that's you, good for you. If not, you're going to want a subject that allows you to talk to a mortgage broker or your bank to secure financing that is suitable for you. You're also going to have subjects for reviewing strata docs and strata financials. Review the contingency fund. Make sure that there is enough in the piggy bank with the strata that if there is a major repair down the road, that you're not paying a special levy. Other subjects, again, you could have a subject to speak to your lawyer and have them review the contract, and just talk to your realtor. They'll walk you through all the options and all the potential subjects that you could include. You're also going to have items included in the purchase. And so if there's ever a dispute between a seller and a buyer, this is usually where we see it. It's what does the seller take or leave with the property? And so the default is if it's affixed or bolted into the property, it's typically referred to as a fixture, and it would be included in your purchase. And that might include, mirrors that are bolted to the wall, shelving that's nailed in. In contrast, if it is easily movable, or if it is expressly excluded in the contract, it would not be included. Those are referred to as chattels. So a painting that's maybe hanging by a nail. If there's something that you want included, make sure it's listed. You're going to see typically the fridge, the stove, the range, the washer and dryer, the dishwasher. But make sure you also include remotes for garage doors, remotes for fans. I saw a scenario within the last year where a buyer had put in all appliances, and the seller, I think, maybe scanned over that and just signed it. And much to their dismay, that included the espresso maker, the toaster, the microwave. Little things that you might not think about, but if it's important to you to include in the purchase, make sure it's expressly written. Talk to your realtor, ask them to include it. And so that avoids the dispute down the road. If you think something's going to be included in the purchase, make sure it's listed in the contract to avoid that dispute.
Thanks, John. Moving on, what needs to be included in a rent-to-own contract? And how can future homeowners protect themselves against those risks?
Yeah, so rent-to-own programs are becoming more and more popular. We're seeing them with developers trying to get creative and help you enter the Vancouver market and the Lower Mainland market, which is pretty tough to get into right now. And so developers are coming up with creative solutions, and one of them is the rent-to-own program. And so rent-to-own, there's two pieces to it. You have the residential portion, which would have the typical lease provisions. You'll have, whether it's a year term, maybe you have a 5-year term. You're going to have the term in there, and you're going to have the monthly payments, what's included with your lease, whether utilities are included or not. The second piece is going to be the purchase portion. And so it's either going to be structured as an option to purchase that you can exercise within your lease, or it's going to be a mandated purchase after a certain amount of time. Obviously, the option to purchase is in your favor, as you have the right to exercise it or not. Now, included with this purchase or option portion of the rent-to-own, you're going to have a monthly payment likely that is added on to your rent. And so this is allowing you to build up your down payment. That amount would be applied to your purchase once you exercise your option. And so it gives you a chance to build up your down payment. Your overall cost month to month might be a little bit higher, but it helps you get into the door. And so a couple things to keep in mind. That option fee that you pay in addition to the rent, if you aren't able to exercise the option or complete the purchase as set out in your contract, that option fee is likely going to be forfeited to the seller. And so keep that in mind. Be aware that if you can't complete, if maybe employment is not long term for you, or if you're on the bubble of whether you might qualify, just be aware that after the term of your residential lease, you need to be ready to complete. And so keep that in mind. Negotiate with the seller. Maybe see if they'd be willing to split that option fee if you can't complete 50-50. Sellers are usually, sellers are in the business to sell. And so developers might be willing to pay for your legal fees if you want to seek independent legal advice. Ask for it. Have them review the contract. Have a lawyer review the contract. And so I'd say the biggest risk with the rent-to-own is, what happens at the point in time where you need to exercise your option or you need to complete? Are you ready? And if not, are you ready to forfeit your option fee? And so that's the major risk with the rent-to-own. The flip side is you get into the market. Usually you lock in the purchase price at the point of entering the lease, and so you would receive any market gains that would be acquired over the residential lease. And so that can be nice too. You can have an increase in the property value while you're renting and before you purchase. So a few things to consider with the rent-to-own.
What are the legal considerations a home buyer should know?
Yeah, so the pre-build scenario, a developer maybe has the part of land that they're going to develop, and they're seeking permits from the city or working with the city to get through to the building permit stage. But they've reached a point where they can market to the public, and so that's where you enter. They've advertised, maybe you've gone in with your realtor and seen their showroom. They're going to present you with a contract that they're going to have drafted particular to their development. And so in this contract, you're going to find a few things. You're going to find a completion date range that is not set in stone. And so one of the biggest things with the pre-build scenario is that you need to be flexible as a buyer. Developments don't always complete on time, and so be ready for extensions to the completion date. Maybe ask the developer to take the contract back to your lawyer and have it looked at. Maybe I'm going to sound like a broken record on that, but if you have any questions, you need to go talk to your lawyer. And so a few things that'll be a little bit different in the pre-build contract. One item that's not typically in the standard contract is that the developer needs to have as a provision in the contract that you cannot assign the contract without their consent. And this is a recent development that is intended to protect the public interest and prevent, multiple assignments of contracts. And so just be aware that if, you're looking to jump into the market at one point and then sell once the development is ready and complete, you need to rely on the developer to give you that consent, and they might not. So keep that in mind. With the contract, the developer is also required to give you a disclosure statement. And so the disclosure statement, there's requirements in the Real Estate Development and Marketing Act, and this is policed by the Office of the Superintendent of Real Estate. And so these are all things that the developer must disclose to you to make sure that you're fully aware of what the development is going to be and what you're getting with the purchase. So this will include information about the developer. Typically, the developer will be a company that is set up just for this project. And so you're likely not going to do a search online of the developer's name and find historically this is what the developer has done. There might be names that are tied in that would connect you to the general contractor that's doing all these projects. But look for the names of the directors. The directors are going to be the ones that are tied to all these projects. And so if you do a search online of these directors, you're going to probably find some websites or news stories, good or bad, that will give you an indication whether this developer is trustworthy, or whether they have historical troubles with projects. And so the disclosure statement will also list the preliminary strata plans. So this will give you an idea of the structure of the development, including your unit, all the limited and common property that would be managed by the strata corporation, what might be assigned to you, your particular unit. And so have a review of that. Make sure that you are given advice if needed to review those plans, and just be aware of what exactly you are purchasing. The disclosure statement will also include the warranties that the seller will be giving you. And typically it's going to be the 10, 5, and 2 warranties, which is 2 years for the materials and labor, 5 years for the building envelope, and 10 years for the structure. And so most of those items would be covered or looked over by your strata company. When you're buying a pre-build, it's most likely going to be strata. And so those bigger ticket items are usually going to be looked after. But if there's something particular to your unit after you purchase that's maybe faulty installation or materials that are defective within 2 years, talk to your developer and ask them to fix it. And if there's any dispute there, again, go ask your lawyer if you have legal standing to compel them to fix it for you. So again, the major item to keep in mind is the completion date. So usually there will be a range, a 3-month range in the disclosure statement of when the developer expects to complete. There's also usually an ability to extend that range. And so just be aware that what they say in the disclosure statement might be different based on, just the way that the development went, market realities. There's also going to be an outside date or a drop dead date, and that's the very final date that the sale can complete. So keep in mind that when you're purchasing a pre-build, you might run up to that completion date, and that might be kind of the area or the timeline that you will be completing.
John, let's talk about different home buying strategies. If a buyer is looking at a home share agreement, what are the risks, and what should they know about before entering into such an agreement?
Yeah, so the home share arrangement is a scenario where you would be purchasing in with a different party. So often, the most common one that we see would be parents and children buying in together with the intention to then live at the property. We've seen siblings enter these types of arrangements, and it's possible with friends as well. So a few things to consider when entering this arrangement. I'd say the biggest thing from the outset would be have something in writing that you can fall back on and refer to when there's a dispute, if there's a dispute. And it just saves a headache down the road when you're trying to think about, well, who's responsible for that and how do we pay for this? And so I would recommend, again, talk to a lawyer, have them walk through the things that you need to consider. And maybe I'll just run through a little list that to keep in mind. So you'll want to establish the breakdown of the equity ownership. How much of the property do you own? Who pays for the ongoing maintenance and who's responsible to maintain the day-to-day wear and tear items? How are property taxes and utilities paid? What about payment of large ticket items? Are you paying into a contingency fund, like as if there was a strata involved, to pay for the big ticket items down the road so that you can replace the roof or the water heater? Those little things. If there's a mortgage that parties are paying down, what happens if one of the parties can no longer meet the mortgage payments? How are you going to come up with the funds? And one of the larger things that people don't often think about is the dissolution of the home share structure. So this is probably an exciting opportunity if you're thinking about this with your parents or siblings to get into the market, and you otherwise might not be able to qualify to pass the stress test for conventional financing. But you also need to look beyond, look down the road, because eventually the property is going to be sold. And so what happens if a party dies? What happens if one party all of a sudden wants to sell? You might want to consider including a timeline that you must keep the home before you can look to sell. Otherwise, you might have a scenario where after a year, one party is looking to move on, and maybe the other, or maybe you, were thinking, oh, I thought this was a 5-year deal, and we wanted to build our equity for 5 years and then move out. So have those things considered and have them in writing. Consider how the sale might be triggered. So are you giving notice of 6 months? Are you, is it when your conventional financing, maybe the term expires after 3 years or 5 years? So think about those things, hash it out with your co-owner, anticipated co-owner, and make sure it's in writing. In a scenario where it's mom and dad and children, you also have to keep in mind that there's going to be potentially some contention with siblings. So is there a structure where mom and dad are gifting the house to you when they pass away and that comes out of your inheritance? Are you at that point going to have a mortgage that you're paying back to the estate? Just keep in mind that siblings, unless there's full transparency or full trust, siblings might have some questions. So I would be transparent, invite them into the conversation potentially. If you're willing, give them the agreement, lay it all out so that the intentions of mom and dad are very clear so that there's no estate dispute down the road.
If a buyer is looking at equity loans, what are the risks, and what should they know before entering into such an agreement?
Yeah, so the equity loan scenario might be a situation where maybe you don't qualify for conventional financing, or maybe you don't have a deposit, a down payment that you are saving, and you need some help from family, whether it's grandparents or parents. Maybe they're willing to step in and give you that down payment or assist with the purchase, and they would take over the position of lender. So it's the bank of mom and dad scenario. And so if it is combined with conventional financing, there might be a few more hoops to jump through. Parents might need to go on title as legal co-owners. But from the parent side of things, if you can get a mortgage on title to evidence this loan, that would be best case scenario. You're protecting your loan from third-party creditors. And even if you do trust your children and know that they're going to pay you back, at least there's something on title that protects you as a secured party. And so if a third-party creditor came along, you would take preference over their claim. In addition, if there is any dispute down the road as to whether it was a gift from mom and dad or a loan, the courts will look to the intentions of the parties at the time that the transfer was made. And so mom and dad, if you're planning to make a gift to one of your kids and you're planning to redo your will in maybe 5-10 years, that might not be sufficient. You would want something, maybe a gift letter made at the time of the transfer, or redo your wills at the time of the transfer to contemplate whether this comes out of an inheritance or whether it's in addition to an inheritance. How is the gift structured, and are there any strings attached? For the children, a lot of the same concerns. If there's going to be an estate dispute between you and your siblings, it's probably because there's not been transparency. So get something in writing, have it very clear, and consider what happens when mom and dad pass away. Is the loan payable to the estate? What are the payment terms? Often with family, there's a lot of assumptions that are made. With parents and kids, there can be skipped payments. We trust our family, or we like to trust our family. And so it's just best to have something in writing that we can fall back on and refer to when there is a dispute, if that were to arise. There can be a lot of distrust if there isn't transparency. And so just be upfront with your siblings. If you are the kids, be upfront with, this is how we intend to pay mom and dad back. We recognize that this is a loan, and have it evidenced by maybe a promissory note or maybe that mortgage on title, just so that it's clear to everyone what exactly is happening.
Thank you, John, for sharing insight into purchase contracts. If you would like additional information, please check out John's website. If you found this video useful, check out my other industry expert interviews in the HAVAN home buying series at Homebuilders Association Vancouver. Thanks for joining us today, and the best of luck in the search for your new home.